a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
India ETFs, by all accounts, are soaring so far this year. We're going to find out why from our ETF Research Director, Nina Mishra, who joins us right now. So apparently these India ETFs are pretty big performers in the emerging market space?
Yes, I mean, emerging market space in general has been doing very well. All emerging market ETFs have done well, and I think we discussed a few weeks back. But within that space, India ETFs in particular have done really well this year, and we are going to discuss reasons behind this outperformance. Ever since Prime Minister Modi was elected in 2014, he has pushed a number of critical reforms, and foreign investors believe that his government will be able to do more to promote infrastructure, foreign investment, and revamp the taxation policy there, as also reduce corruption in the system. And whatever his government has been doing so far has been pretty successful. And recently his party won a major state election, and that has greatly improved the chances of him being re-elected in the 2018 general election.
I see.
So that has also led foreign investors to pour a lot of money into Indian stocks. The IMF expects Indian economy to grow at the rate of 7.2% in 2017 and 7.7% in 2018 next year, making it the fastest growing economy in the world. So that is the reason, because of this optimism and high growth potential, that investors are pouring money. And the currency has also done really well this year. It's up about 5% against the dollar.
So you say even big U.S. companies are betting big on India, even with this American, hire American mantra that we're hearing from Washington?
Yes, exactly. Apple is in fact expected to start manufacturing, or rather assembling, iPhones in India within the next 1 or 2 months. They're almost ready with that. And India is an important market for Apple because growth in China has been slowing down, and India is the second largest smartphone market in the world now. Amazon has been investing very big in India. They are investing about $5 billion in their Indian operations, and they are a big e-commerce operator in India now. Last week, there was an article in the New York Times about how aggressively Uber is investing and expanding in India, because they had to retreat from China last year. So now India is the major growth market for them. And it's a very important market for Facebook and Google as well. In fact, they have been competing with each other to provide free connectivity to Indians who do not have access to internet, because with a population exceeding 1.3 billion, India will become the largest free internet market in the world.
Wow.
I said free because China has a lot of restrictions.
Yes.
So because of the growth potential, these companies are betting big on India, and investors are pouring money into Indian stocks.
All right, you have a table here of the 3 most popular India ETFs and how they all compare with each other.
Yes. So the most popular one is with the ticker INDA, India. It's by iShares MSCI India ETF. Very popular, with about 4.9 billion in assets under management. Charges 71 basis points in expenses. It's up more than 16% this year. It's a buy-ranked ETF. The second one, which I also like a lot, it's by Wisdom Tree. It has 1.6 billion in assets under management. Slightly more expensive with the 84 basis points, but it's a smart beta ETF. It follows earnings weighted methodology and invests in profitable Indian companies. So I think this is also a good way to invest in India. This is also Zacks ranked number 2. And if you want higher returns and you are ready to take higher risk, then maybe look at the small cap India ETF. There's one by VanEck, the ticker SCIF. This has not so popular, this one, about 253 million in assets and 78 basis points in expense ratio. It is up almost 35% this year.
So I have to clarify, you said the Wisdom Tree India ETF has exposure to profitable
India companies and then weighting those companies by earnings.
Does that suggest or mean necessarily that these other two have non-profitable companies in their portfolio?
No, it's the basic differences in methodology. The India is market cap weighted, so according to market cap, they decide the exposure to companies, whereas with the Wisdom Tree fund decides exposure in terms of profitability.
Okay. Do you own either of those?
No, I don't. But on this chart, I have comparative performance of all these 3 ETFs.
To the S&P?
I have this in comparison to the S&P 500 ETF, which is SPY. And I have also compared it with the broader emerging market ETF with the ticker EEM. So as you can see, the the small cap India ETF is up almost 30% in the last 3 months. And then India and EPI follow, but they are much better performers than the broader emerging market ETF and, of course, US stocks as well.
Okay. Thank you for all of that information. Don't forget, you can get more information on ETFs in general, other trends, other specific ETFs, in that section of Zacks.com. All you need to do is go to the home page and use the Funds tab in the top toolbar. That'll help direct you to the ETF section of our website. With Nina, I'm Terry Ruffalo.